trading. So let's just actually set this discussion up. We've got two very eminent people joining us to explain the intricacies to us. Why we are discussing this is very simple. SEBI has actually put out a paper which essentially aims to slow down the time advantage that algo firms have over the rest of us. Now the question is it really fair? Which is the SEBI rules to slow down algo trading. Is it fair or not? Now let's have the graphics up, please. The point is this. HFTs, high frequency traders, or commonly known as algorithmic traders, or firms rather, for a fee they can place their computers within the exchange premises. NSE allows it for a fee. I'm told it's 8 to 12 lakh rupees at NSE. BSE allows it for free because they want to gain market share. So the closer you are to the exchange server, you basically can access and see prices first. We are talking about milliseconds here. When I say first, we're talking about milliseconds. You and I mean, if we're investors in the market, we don't even notice it. But for machines, computers, milliseconds matters quite a bit. 1 second, by the way, is 100 milliseconds. So, we can't notice it, but for algos, it matters a great deal. The SEBI paper, via a variety of rules, change in rules, is essentially saying that even if you pay money, you should be at par with essentially everybody else. You should not have that time advantage that you currently have. Algos are up in arms, Rima. They're saying, we're not competing against the average Joe. We're competing against other machines. So why is there such a big such a big furore that we have an advantage? We don't. We compete against other machines. So this is a useless debate. Their argument is this. The SEBI paper is invited comments, and the cutoff date is the 31st of August. This debate matters, by the way. Algos generate about 80% of the total order flow in the market on any given day. Order flow, which means not actual order execution. That is about 40-50%, but the total order flow, the depth of the market, is 80% generated by algo firms. Let's get Deena Mehta in. She's joining us right now. A long-time market veteran and keen watcher of these issues. We also have Kunal Nandwani joining in. He runs a firm which designs software for HFTs. Thank you very much, both of you, for joining in. Ms. Mehta, let me start with you. Will the SEBI proposals level the playing field? And more importantly, is there a need to level the playing field, really?
I think, I do not know what SEBI is trying to address. According to me, there are two issues so far as the algo trading is concerned. One is the issue about, a section of customers, maybe retail customers or small time customers, not getting, a level playing field, or rather they are getting left out when it comes to getting their orders executed. And when they see the touch line, they are not really able to capture the touch line, because when they put the order, they get at a different price other than the touch line. So that is one part of, the algo trading issue. The second part of the algo trading issue is a systemic risk, that the algo trading puts on the entire system. Like, so we know on one particular Diwali day, if I remember, the algos misfired, and entire trading had to be cancelled, all the transactions had to be cancelled. So what is the kind of risk management mechanism that we have so far as controlling the impact of algo on the market is concerned? Now, what SEBI's paper is trying to do is nothing but slow down the entire thing by saying that if we bunch the orders, we keep them remain orders, and then we release them into the system, etc., etc. So all these measures are at slowing down. And even if you look at the slowing down parameters, like 100 milliseconds or 200 milliseconds, yeah.
Right. Kunal,
so, yeah.
Right. Ma'am, I'll come back to you. Kunal, let's clear a basic question first. Are high-frequency firms competing against the average Joe, retail players, or against other algo players?
Right. So, in my opinion, HFT and algos are helping automate trading. They are helping deepen the liquidity in the market. They are helping markets achieve tighter spreads. In the absence of Algos and HFT, by the way, the markets may not exist at the level they are right now in terms of, 10, 20 years ago, if you were to send an order to the exchange or if you wanted to get a trade done, it will take you probably the whole day and you would know at the end of the day whether you got filled or not, or what price did you get. Today, when a retail investor goes to the market, buys a share, say Reliance share, gets done within a second, it's not by magic, it's by technology behind the depth that is provided by Algo and HFT players, and they are there for a reason to help match the prices across different investors and help provide the tighter spread. So I think Algos fight the other Algos? Yes. Does a retail investor or any smaller investor, are they really bothered about if they get done at, let's say, 100 rupees or 100 rupees 0.01, or if within a millisecond the price moves? Not really. Retail investors' view tend to be long-term. They're not short-term investors. They would buy a share, sell maybe by the end of the day, end of the month, end of the year. For them, having a liquidity, having an order book, being able to trade when they want is what they need, which is what is provided by the Algo players. Everybody else, so look at fund managers, look at any institutional brokers, look at active traders, all of them use algorithms to get trades done in a very efficient manner. If a human being can trade once in a second, an algorithm can trade 1,000 times a second. I think there's nothing wrong with it. The markets have become faster. The markets need to be faster. We are living in a global world. Today, if you don't offer this infrastructure in India, foreign investors will go to Singapore exchange to trade Nifty. They'll go to Dubai exchange to trade Sensex. Why will they come to India if it's slow or unpredictable, and there are various other challenges we face within India?
So Kunal, what you're basically saying is that Algos provide the liquidity, and if you do take out the Algos as well as the high frequency trades, the market as it exists won't exist. Dina, would you concur with that view?
No, I do not agree at all. You see, there is no need to say you have one at the cost of other. You can sell, you can serve all the objectives by, for example, in Europe, there are exchanges which give a priority to the retail order. So if a retail order comes in the queue, it gets a priority. So, there are ways and ways to keep the existing system at the same time. To permit the small guys or the retail guys to have a equal opportunity, because the kind of cost which is incurred in setting up the algo desk, the softwares, the hardware, etc., it is not affordable for everybody to do to spend that kind of money. So on one side, yes, algos and others, they do provide liquidity, but at the same time we have to address the concerns of the retail investors who are small timers, who are getting kicked out of the system, and we cannot say.
Right. I mean, so, okay, fair enough. So you're saying balance it out. Kunal, one of SEBI's proposals is that have two separate queues, basically have two separate pipes. One pipe will carry retail orders, the other pipe will carry HFT orders. Will it work? I mean, the HFT pipe is basically 80% of the order flow. The retail is only the rest of the 20%. Will it work?
No, I think that will create unintentional arbitrage opportunities, which will actually possibly help HFTs create more trading opportunities, because it's harder to define what's a pro order, what's a client order. There is some exchange definition in which it falls right now, but there are ways around which some brokers who do retail flow as well as HFT flow as well as client flow can actually merge all that and still get better prices. And we don't know how it's going to play out. Devil is in the detail. How do you really define a retail order and how do you prioritize their order over the other? I do not think it's a good solution. And to take an analogy, think about Mumbai-Pune highway. If a cyclist says that, I'm going to take so long and to go on the highway and the toll charges are too high for me. So, generally a cyclist doesn't need to go Mumbai to Pune that fast, right? If they need to go, they will go on a bus, right? And this is what a mutual fund will do. So retail investor invest in mutual funds who then trade faster. They have access to they can afford this algo trading infrastructure if needed. So I think net the debate that I think I agree with ma'am that risk management is something we can further debate on. But in my opinion, already India, NSE, BSE trade probably more trades or more orders per day, per year compared to any other exchange in the world. We've managed that without any major mess up. There hasn't been any major issue since one incident that ma'am referred to, which was back in 2011, 2012. So we've done fairly well. SEBI has done really well in terms of regulating this in a stock exchange. Every algo order goes through 15 comprehensive risk checks. There is already a big comprehensive process around approving the algos, running them in the market. There is enough exchange risk management. There is enough surveillance also, which is improving by the day. So I think we are all, the risk management certainly we can debate. We can try to make it better. But making any change, you gave very good example that if somebody is buying an internet of 1 Mbps versus 20 Mbps, surely 20 Mbps guy is going to be faster, right? And there is no way you can change that. Now you can't say that nobody, if 1 Mbps guy's information access request to Google goes first, he should get access first. It shouldn't happen, right? I don't think it's a fair capital economic world we live in. So I feel the changes by SEBI proposed are interesting ones to look at. They have been debated globally. None of them are perfect solutions. There is very limited precedent, if any, across any of those measures. But they are a good debate. They're a good starting point. Hopefully in time, there will be a constructive debate and a good final decision that should be taken to improve the markets.
All right, good chat, Kunal. Thank you, ma'am, for joining us on this discussion. You know that 1 Mbps he was referring to. I mean, I'm the 1 Mbps guy. So, by the way, I looked up this proposal. These kind of proposals are not an implementation anywhere in the world. Okay. I mean, actually, the SEBI discussion paper points this out, saying that other countries, 1 or 2 other countries have tried it, abandoned it because it doesn't work. Okay. So we'll have to see. You know, regulators also have an ego, right? They put something out, they ask for comments, but maybe the entire thing won't be implemented. But some of it actually may get implemented. So we'll keep a close eye on this one. We'll take a quick break. We'll get you more on